Hey, Chuck.
Pretty good. How about yourself?
Almost as good as you. I was strapping young gentleman over there. I like that chain. Where'd you get that from? That comes in 3X, right? I think I need one of those. Anyway, hey, tell us about the wonderful worlds of insurance. You have possibly the best presentation that would make one want to go out and become insured, and or the science or the philosophy of insurance. Kind of share that with us.
Okay. Well, Dallas, I have a different take on insurance for the simple fact that our community has not really been educated on insurance, and we've been kind of left out, and we're missing out on some things.
Okay.
And when I say that, first of all, there's different types of insurance that you can pick up. One being term insurance, and it's kind of like, if you look at it, it's kind of like renting a house or renting an apartment.
Okay.
Term insurance is exactly that, for a specific amount of time.
What's the general time frame on term insurance? What is that?
A term can run anywhere from a 10-year policy, 20-year policy, and if you're younger, you can get a 30-year policy.
Okay.
And the reason being is, term insurance, they say that you should get term when you're at a younger age, because you have the most that you need to be insured about. If you have a house and things of that nature, then you need that type of insurance to cover you, and should something happen to you, to take care of that need for your loved ones.
Let me ask you a question. Term insurance, is that a lot cheaper than having, I would say, is the correct term, conventional insurance or regular insurance?
There's another term that we call it whole life insurance.
Okay, yeah.
So it is cheaper, but again, the difference with whole life is exactly that, the whole life of your entire life.
Your existence, okay.
Right, and basically, whole life is more like buying a house. You're going to be with it for the rest of your life, or a lot of people, you're with it for a good investment of a time.
Okay.
Whereas term is just strictly for a specific amount of time, and you walk away from it with nothing. Okay, whole life, you can build cash value up with it. Again, it's probably more active that you pick up term insurance when you're younger, when you have the most to lose. And then once you hit a certain age, on the downhill side of your life, then you don't need to have as much insurance. You can, and that the ideal is that you've invested the difference between term into maybe a 401k or some type of investment, so that now that you're older, you don't have as much of a house note to go by, and you only need a certain amount to be buried. So it's not as expensive to be a burial to cover us. And it's one of my pet peeves, that I'm also teach Dr. King's philosophy of nonviolence. So Dr. King looked at violence as holistically. And I look at this as a form of violence when you have your family and you say that these are the people that you love, but yet and still you don't protect them should something happen. And I think that's a real slap in the face. We say we love our family, we want to take care of them, but should something happen to you as a breadwinner or your wife, where in a household we need two incomes, now you've just devastated the whole family.
Right.
And then I have a pet peeve about our young kids. We're now seeing a lot of GoFundMe accounts pop up because we don't have insurance.
Okay.
People don't understand it is very inexpensive to insure your child with a whole life policy when they're young, from $7 to $10 a month.
Right.
So why aren't we not communicating? Because we're not educated about this. We're not informed about it, and we don't, as a race, don't want to look at death.
So why aren't we educating and informing our families that this is a part of our lives that we need to incorporate?
You know what? I don't really know. I know that is my mission. That's one of my missions. We are holding workshops where, we teach financial education to our youth and to our adults. And then we also teach the insurance piece as well. What is it that you need? You only need a little bit of information or a little bit of coverage to cover you should something happen to your child. In the best case scenario, you have a whole life policy on your child. They grow up, they gain cash value, and then they can turn that policy in and use the cash. If they're in college or they're older, they can use that cash. So I think it's one of the things that we have to change the mindset. It's a mindset change that we have to go into, just like with anything, with the violence that we're dealing with this piece of financial and insurance. We have to do a whole mindset change in order for that to happen. Here we are today, we go out and buy $150, $200 tennis shoes,
yes, sir,
but we won't protect our families.
Right. I know when I was growing up, even when I was knocking on the door of adulthood, my dad overemphasized to me. He said, "You should have enough insurance on you to bury yourself while you're living here." Mm-hmm. And that message has always been with me. And then as I progressed and got older in life, and jobs, then insurance was always a part of that. And plus, I would actually get dependent insurance for my children as well. Not that. No, I'm sorry. I would get additional policies on myself. So in the event of my demise, actually they would have something for themselves. And I actually was married at the time, so there would be something for my spouse, and then in addition to the children as well.
Right.
So I've always been schooled and educated on the insurance aspect. So.
And coming up with me as well, my grandmother would have something in place for me that, she gave to us when we got of a certain age. She said, "Here, this is for you guys, and you can do with it. You can put it towards your school. You can do whatever it is you need to do with it." But nowadays, we're not doing that. A lot of the community, I don't know if we dropped the ball and didn't educate, our youth or that next generation. And then there's also a big myth that, I work on my job, I have insurance through my job.
Right.
Well, most people don't understand that once you leave that job,
that's over.
That insurance that you have won't be there anymore. It's not a life insurance policy. It's offered to you, but it's so expensive that you would not even dare to try to even afford it.
Now, is that the equivalent of what Cobra is?
Cobra, yes, that's one form of it, yes. And then it also, the insurance that you currently have through that company, it goes out. If you come out of a group policy that you're in, and then you have to turn around and purchase it yourself, and it's so expensive. And we try to tell people, get insurance while you're young, while you have the good health.
Right.
Because we never know for how long. When you are coming up and you're in a job and you think you have it, and you're 20-something years old, that's when you need to pick up insurance. It's least expensive at that age, and then it stays with you because you have your good health. But again, we don't know for how long you're going to have your good health. So say, for instance, you didn't pick up insurance and you wanted to pick it up at 40. Mm-hmm. It's twice as much at this point in age. So it's very important that we should not run away and shy from the insurance piece. We have to look at it as, now this is an extension. My wife is an auto insurance agent with AAA, okay. and we get auto insurance every single day. We have to have it. We need to look at life insurance exactly like auto insurance. We have to have it. Okay? So when we get to that point where we can, just like investments, we can get it and forget about it, because it's not for us. You're taking care of your kids. You're taking care of your wife or the family should something happen. So it is very important. And now not only do we need life insurance, but we also need nowadays what we call supplemental insurance, because we all have gaps. And what do we mean when I say by gaps? Okay, so I might have a life insurance policy here, and it's a term insurance, and it ends in next year. Well, guess what? I'm going to have a lapse, so I need to pick up something in between, maybe a whole life policy. And then even then, we have insurance, the supplemental piece. We have our major medical, which normally pays 80-20 or 70-30. But when you go to the hospital, you have all these deductibles that you have to take care of, co-pays that you have to take care of. So now we need to fill those gaps in. So we offer what we call an accident and sickness policy. So should you get sick or have an accident outside of work or while you're at work, we pay cash directly to you. So I don't know of any places where, you get hurt and you go to the doctor that they pay the cash directly to you. Normally they paying it to the doctors.
Now, is that the equivalent of that commercial Aflac? It's similar to that.
What type of insurance is that?
We call it supplemental insurance, but it's through combined insurance. Aflac actually...
Is that a disability insurance?
We do have a form of disability with it as well. But Aflac, we were actually started in 1922, and Aflac was formed in 1950. The guys that started Aflac used to work with the company combined. And one of the things I want to mention that when we're looking at insurance that is very, very important, that you ask the question, what are their ratings? I mean, what are their rated? Because there's a third-party company called AM Best that is
that rates insurance company. That's all they ever do. And a good rating is an A+. And with Combined, we have an A+ rating. That means basically they're going to pay out their claims. So that's one thing that when you're looking at insurance, you want to ask them, what are they rated through AM Best?
AM Best, okay.
And if they're rated a C or a D, they're probably not paying out their claims. You're in trouble. Stay away. So, I mean, the supplemental insurance is one piece that we need to pick up. We also have what you call a cancer policy. Cancer policies that pay you a lump sum should you be diagnosed with cancer. You doesn't have to be terminal. They'll pay you a lump sum up to $50,000.
And that's part of the supplemental insurance?
That's an offer of a supplemental as well. And then we have what we call a critical care, which covers you for 12 different illnesses should you be diagnosed with it. And then we also have a disability that pays you day one should you become sick or injured. And then we also have what we call an income protector for small business companies or small business owners that should something happen to them, they need to be protected as well, because if they can't work, they still need income. The bills keep coming.
Now, see, I'm glad to hear about that. I didn't know about that, Chuck, when I got sick. I had got diagnosed with the cancer, and it ended up being stage 3. So I knew I was going to be out for a while. I continued to work until I literally fainted and passed out due to the weakness from treatment, because I didn't feel like I could stop working due to the lack of financial support I had from my spouse.
Right.
So I was going through a lot at that time. Had I known about that, when my doctor gave me the diagnosis, I could have at that point stopped working and could start collecting from my insurance. Is that what you're saying?
Right. Now, you'd have to have it beforehand, and that's why
That's what I meant, if I had it, yeah.
We tell people, don't wait till you're diagnosed. Like, again, we never know how long our health is going to last. And should you have a cancer policy, or should you have even the disability one, let's say you had the cancer policy, very affordable, it would have paid you up to $50,000 cash, one lump sum just for being diagnosed with it. Now, should you have the income protector, or what we call Sick Pay Plus, they would have paid you from day one that the doctor diagnosed you up to 6 months. And it goes, Sick Pay Plus is up to $2,000 a month with Sick Pay Plus. And income protector goes up to $5,000 a month. So basically it covers you should you have that, and it keeps you till your long-term disability kicks in. Because most of us don't have any money. Let's just say this. 65 to 68% of people that file bankruptcy file because of medical bills. That's amazing. And then the American Cancer Society, I was reading, said that there's going to be over 1 million people diagnosed with cancer this year in 2016. And over 500,000 people are going to die from cancer in 2016. Then the American Cancer Society says that 1 out of every 2 males will be diagnosed with cancer. And 1 out of every 3 females will be diagnosed with cancer. Those are some staggering numbers.
Those numbers are getting smaller and smaller.
So why wouldn't you take out something to protect yourself?
Right.
It's an investment in you, and it's a great investment to protect your family, because those medical bills, once you are diagnosed, will come in. And yes, your 80/20 will help you out, but I guarantee you're going to need some additional funding. And that's where we come in, because it's easy, it's quick, easy, and hassle-free with us. When we deal with it, we want to make sure that you are protecting your family. That's my passion, and I'm really passionate about our youth having coverage from the parents and when they're younger.
Hey, 622 here on Discussions with